Welcome back to Squawk on the Street. Pretty tough time for the auto business, as you know, under this new administration, as these tariff and consumer headlines continue to hit the sector. Tesla, by far the worst performer, that blue line at the bottom of that chart. Meantime, GM's chief, Mary Barra, reportedly meeting with the president this week to discuss the automaker's, quote, investment plans, with Trump telling reporters late yesterday, quote, they want to invest $60 billion. Waiting for specifics on that. Shares, meantime, of GM are down 10% on the year.
Tesla also alerting the Trump administration about the impact of tariffs. Shares on pace for another week in the red, adding to those historic declines over the prior few months. Phil LeBeau has been tracking all that action. Hey, Phil.
Hey, Mike, a couple of headlines today, not only regarding Tesla. You guys talked about General Motors just a few minutes ago. We'll talk about BMW as well. Let's start first off with Tesla and a couple of reports coming out of China looking at the possibility of what the stripped-down Model Y could look like. Let's be clear here. None of these headlines tell us anything that we don't already know. There's a lot of speculation in here, and a lot of speculation that's been bantered about over the last couple of weeks. The China rollout is expected in the second half of this year, but that's not confirmed by Tesla. Pricing and specifics still to be determined, and it's a stripped-down Model Y. At least that's the expectation, according to the reports out of China. And will the price of the next Model Y come in under $30,000? That's the big question that is out there. And if it does, how much will that cannibalize the demand for the current Model Y as well as the Model 3? In terms of annual deliveries, a number of analysts are now saying Tesla will not hit 1.79 million in annual deliveries as it did last year. A number of the analysts are estimating 1.7, maybe 1.69 million could be the delivery area, though it remains to be seen what happens through the remainder of this year. There's no doubt, as you take a look at shares of Tesla, that the impact of whether it's Elon Musk's close association with the Trump administration or the increased competition in China, a number of factors are clearly weighing on sales. UBS out with a note today. Colin Langan, one of the more respected auto analysts on Wall Street, saying that their calculation, when you look at the different reports from around the world, is that their sales year to date are down 16% compared to last year. Their price target, they've cut it down to $130. And quickly, guys, I want to take a look at shares of BMW, the company reporting quarterly results early this morning in Europe and saying it expects to take a €1 billion hit this year because of tariffs. Obviously, nobody's quite sure exactly how the tariff landscape will play out over the months to come, but that's the expectation from BMW. Remember, it has a huge plant in South Carolina that supplies North America, and that plant is the largest for BMW. Can they add on to the capacity at that plant? Hard to know. It remains to be seen what will happen there, but if there are auto tariffs that are put into effect on April 2nd for vehicles coming from Germany, clearly that will impact BMW.
And Phil, in terms of the meeting, Mary Barra and at the White House, they touted this, intent to invest $60 billion. Who knows what that computes to in terms of what their previous plans might have been. But is there any other color we're getting out of that?
No, we don't have any other color out of what General Motors might potentially do in the United States. Look, the Trump administration would love to see the plants that are in Mexico and the plants that are in Canada to come back to the U.S. That's not going to happen. I mean, it's not going to happen anytime soon. Now, is it possible that General Motors could say, look, we want to increase our production in the United States and we're going to try to add a plant? Sure, that's a possibility. Or we can add production in certain facilities. That's also a possibility. But those plants in Mexico, they supply not only the United States, they supply a number of other countries as well. And there's a huge investment. The supply chain is already there. General Motors isn't just going to shut those down and bring those back to the United States. So we'll see how this plays out. I think the automakers are all trying to find a way of adding production in the United States while at the same time realizing this is a regional supply chain and a regional production area, map, if you will. You just can't lop off Canada or lop off Mexico. You've got to keep those areas still producing the vehicles that are there or modify it in some fashion.
Right, and I think, that really underscores the message in Tesla's letter that was unsigned. Even aggressive localization, you can't do that for everything. Phil, what did you make of the letter being unsigned and sort of, batting back at tariffs in terms of the impact on U.S. companies, including Tesla?
A very Tesla approach to things. That didn't surprise me, nor does it surprise me that Tesla hasn't had a comment afterward. And look, that was a fairly vague letter, Melissa, in terms of what the potential impact will be, because Tesla doesn't even know. Even with Elon Musk as closely aligned with the president as he is, it's still unclear exactly how tariffs are going to play out starting April 2nd, for how long, and when will there be certainty within the production area. But that letter made it clear, Melissa, that the retaliatory impact of tariffs could have a huge impact on Tesla because it manufactures here in the United States and ships vehicles overseas.
Right. Phil, thank you. Phil LeBeau.